And the moves over the past week reflected a more subdued trading activity. Traders positioned cautiously to see the next steps in the Russia-Ukraine talks after the Alaska summit in the week prior. While Monday to Thursday showed range-bound trading activity, but risk assets were boosted on Friday after Federal Reserve Chair Jerome Powell hinted at a rate cut as early as September. While still, markets can brace for some volatility in the week ahead, as reflected in the crypto markets after Friday's surge. Let's take a look at WION's global markets and economic health check to see what happened over the past week. Now, crude oil's biggest weekly gain since early July was a standout performance. Much of those gains came after data showed an increase in U.S. stockpiles to the highest in over 2 years. That even as the market weighed the outlook for Russian crude flows to India, gold was the other standout performer last week. Cryptos and the dollar were on the back foot through the week, with digital assets seeing some boost on Friday, but the weekend trading pointed to another pullback in cryptos. Moving on to Asia-Pacific stock markets, China's main stock index led the gains in the region with a 3.5% gains. The U.S.-China trade truce kept investors betting on Chinese stocks. Trump extended the truce with China even as he upped his tariff rhetoric on India for buying Russian oil. While still, India's benchmark indices ended flat for the week. Friday's sell-off in Indian stocks reversed gains and halted a 6-day rally, but Japanese stocks showed the biggest hit. Japan's Nikkei closed out the week 1.7% in the red. Wall Street stocks nudged higher on Friday after the S&P 500 slipped for 5 straight sessions. Before that, a deep sell-off in tech stocks hit Nasdaq and stalled a record-breaking rally since April's lows. The Canadian and the Brazilian benchmarks gained over 1% to defy U.S. trading trends, despite Trump's tariff weighing on sentiment for those stocks. However, with the uncertainty surrounding Russia-Ukraine, the risk is more tilted towards a sell-off in the week ahead. Across the Atlantic, European stocks surged over the past week. Benchmarks across the region closed the week in the green. UK's FTSE led the gains, closing the week with a 2% gain. French CAC and the German DAX end with marginal gains. The South African stock index added nearly 1%. For the coming week, what happens in the Russia-Ukraine peace talks will likely drive European stocks. Now let's turn our attention to the overall economic outlook. Let's take a look at the Asia-Pacific region. Now, Trump's trade war worries have weighed on the outlook for global economies. In Asia, India is still expected to be the fastest growing major economy in the world. However, a standoff with the U.S. on tariffs is likely to weigh on India's growth. The outlook for the rest of Asia remains negative. For China, the outlook is still mired by doubts from the recession in its real estate crisis. However, the latest trade truce with the U.S. is a good sign for the economy, as reflected in a rebound in manufacturing activity. The economic outlook for Japan and Australia mirrored worries from Trump's trade war. In the Americas, the economic outlook for the U.S., Canada, Brazil, and Argentina shows trade tariffs are likely to hurt economic growth. For the U.S. economy, stagflation bets are still weighing on sentiment and the outlook. That was confirmed by Powell at the Fed's Jackson Hole summit on Friday. The Fed boss also hinted at a rate cut as early as September. However, tariffs are starting to show up in inflation, and the Fed's preferred price pressures reading in the coming week could give some clues to the rate path and move markets. Separately, the economic activity expectations for Canada, Brazil, and Argentina were also cut. On the other side of the Atlantic, the negative outlook seems to be more widespread. The expectations show the clouds are darkening again for the UK and other European economies. As feared, the second estimate of Germany's June quarter GDP data saw the economy falling back into an even worse contraction. The size of the German economy is still currently slightly below its 2019 level. That is probably the best and most painful illustration of stagnation. The trade deals agreed with the U.S. point to more pain, and those worries continue to cloud the outlook for the region. The story wasn't very different for African economies, where the outlook remains negative.